Hey everyone, great to see you. Today's real treat. Good friend of the show, Koby Kushner. We haven't talked to Koby in a while, but it was centered around lithium and whenever he was at Red Cloud. But let me tell you just a few things and why this is going to be such a great conversation around precious metals and gold is that rarely do you have someone who is younger in this space, which is great. We need the young blood, but also like a breadth of experience, not only in mining engineering, but in capital markets. So Koby's got his P engineering and a CFA. He's got tons of experience in where most of us are interested in Canada, the Abitibi. You're talking about Hemlo, Red Lake. So he's got great experience from the mining perspective there, but also an analyst over at Red Cloud, unique mining investment bank. So we've got someone here who's going to walk us through kind of what's going on in the sector here with precious metals. We're gonna talk to him eventually, sooner or later here too, about lithium, as Koby has a private lithium, Libra lithium deal, and we'll talk about that soon. But we wanted to really grab a harness of gold. It's really lighting up out there, and get some kind of tips and things we need to look at, need to do. And we're thrilled to have you, Koby. We get to learn lots from you. How are things in general for you? And we'll dive right in.
Yeah, thanks for that, Andrew. It's funny. It's funny being being known as a lithium analyst, but I think that just speaks to the scarcity of people with lithium expertise. And of course, everyone's a gold expert. And I've actually spent a lot more time in the gold sector than I have in compared to any other metals. All my experience as a mining engineer was in gold. But yeah, what's exciting? Lots is exciting. So Libra Lithium, that private lithium company, did a transaction with a public company called Athena Gold. So that is ATHA, ATHA, on the Canadian Securities Exchange, where we vended in one of our gold projects into this public entity. And this entity has two flagship projects now. So one of them is in the Red Lake district. It's called the Laird Lake Project. And the other one is in the Walker Lane region of Nevada, which is called Excelsior Springs.
And I mean, those are obviously Nevada and Abitibi. I mean, these are well-known, very well-known areas. Certainly, if someone's looking to be looking for safe jurisdictions, that's going to be it. And I think we're going to kind of tone this overall conversation in regards to region, in regards to the overall why, because you've put this deal together and it's great timing. But what do you find special about these projects that you have? And I think it'll kind of unfold as we talk about some of the major producers, some of the juniors, and what your overall thoughts are. But maybe kind of what was it that attracted you to this side of things anyway?
Yeah, sure. So what you have here is the Walker Lane, which is a region of Nevada that I think is a lot more manageable for a junior. But what excites me is looking at where majors are spending their money, and it's looking like majors are actually putting more dollars into the Walker Lane. They're moving away from what defines a tier one asset, and what they're looking at are margins. So previously it was scale. You needed something that produced 500,000 ounces a year. But they're starting to look at the Walker Lane trend, because you're not looking for these buried deep Carlin type deposits. You're looking for things that are much closer to surface. This is an old mining camp from the Wild West of Nevada, the 1800s, all historically underground. And then with a modern lens, some of these targets actually make for very compelling, large scale, open pittable, very high margin operations. So to give you color, Andrew, and I'm not even talking about gold at 2,700, just traditionally over the last 10 years, call it the typical cutoff grade that you need for something to work in the Walker Lane. Assuming you've got a near surface open pittable deposit, you only need 0.2 grams a ton. That's your economic threshold.
That's insane. That's so low. Mm-hmm. Like that's
for an oxide heap leachable project, and there's a lot of low-hanging fruit in the Walker Lane, and I think the majors are starting to realize that. But yeah, you can again, looking at where these majors are spending their money. Anglo Gold for example, like if you told me 10 years ago that 40% of their budget would be going towards Nevada, 40% of their global exploration budget would be going over to Nevada, I would not believe you, right?
Yeah, because I mean, we talked about this a little bit earlier. There's, often a big rush towards Africa because you can get your lower costs. You can get some high grade. But the flip side of that is when we chatted a little bit about Barrick having a little bit of issues in Mali, and that can rear its head anytime, very quickly, without notice. And that's got to scare the big producers. And let me ask you this: when you're talking about open pit and quick, do you think that a lot of these majors now are going to say, listen, we would like to find a project maybe that's near term, very fast, is open pit, at the expense of we need to find something that's massive, huge, underground. I mean, that's great if it's there, but like that they might want to be able to take advantage of. We have a chance right now to be able to put some things into production.
I think every major has a bit of a different strategy, but there are common themes throughout. So one of them is the location. I think generally they're deploying more dollars into safe jurisdictions like Canada and the USA. They are also, other than Newmont, all the other companies are really increasing their exploration budgets. They're ramping that up. Interestingly, if you look at the breakdown of how these companies are of that exploration spend, Agnico, which is probably one of the top performing. What are they up year over year? They're up. They're up 80%. Yeah. So they've done incredibly well. They're putting 60% of their exploration focus into grassroots assets.
Wow.
So what's that tell you? Like, to me, that tells me that a lot of these existing resources out there aren't that good quality. And I think you can kind of see that just, if you look at, so in their eyes, maybe it's better to just discover new deposits instead of, delineating known ones, right?
Yeah.
But if you look at Newmont, I think they've kind of taken on a bit of a different mentality where, their exploration budget is somewhat stagnant. It's been pretty consistent over the last 5 years. Call it. They've been spending anywhere between $250 to $300 million a year on exploration, and again, they're not really ramping that up. But they are producing more ounces. They are set for to have a good year in terms of number of ounces produced, but a bad year in terms of what are those ounces coming in at in terms of cost. So their all-in sustaining costs over the last 5 years have creeped up 54%. So those ounces that they're getting diseconomies of scale, right?
Yes.
You think that as you produce more, then on a unit basis, then it should go down, but it's creeping up a lot faster than Agnico's and Kinross's all-in sustaining costs are creeping up.
That's what I thought was so shocking when we got the last earnings report, because there's lots of upside on Newmont. EPS went up, beat the kind of estimates, consensus estimates. Revenue was good, but was it that their costs creeped up to $1,900, or what is that where it went up to?
Yeah, so their Q3 numbers.
Yes, yeah,
1,600. So
yeah, oh wow,
that's higher than the other companies that I was looking at yesterday. So I was looking through Barrick, Newmont, Agnico, Kinross, AngloGold, and Centerra, who's more, call it more of a junior producer.
Now, what do you think? Like, because I mean, one can speculate, and this is all speculation, the entire thing. VRIC and PDAC will come up. Do you think they'll be coming and this year be certainly a lot more open? Not to M&A, because I think we'll get into M&A, because I think that hopefully will happen. But also to look at projects like, listen, we need to get stuff in the pipeline here. Like, what are we working on that we can really bring in some ounces?
Yeah, so again, I think it will really depend on the producer. Newmont, I think part of the reason that they're not, getting all they're not spending adequate. I don't know if that's the right word. They're not going all in on exploration right now. I think part of the reason is because they already have a huge inventory, and they're kind of prioritizing what they already have. It seems like. Keep in mind that they were, it wasn't that long ago that they took over Goldcorp, right? So that was a big acquisition for them that made them the top gold producer. Barrick, we haven't seen that scale of M&A from them in a long time. Although they tried to merge with Newmont, they're all trying to be the biggest, but Barrick's really fallen behind. I think Barrick but they're also pretty excited about their own portfolio, and they're really making a big push into Canada, interestingly enough. So in 2020, their exploration budget to Canada was only $4 million. Their only gold producer there is the Hemlo mine, still is. And then in 2024, they're spending $18 million in Canada alone. So I think that might I think that might be a signal. Where are they most likely to be looking at targets? Exploration in the U.S. has gone up as well in terms of percentage-wise, not as much. Keep in mind that so much more of their production comes from Nevada than it does at the Hemlo mine in Canada. But to be clear, they were spending about $100 million in exploration in the U.S. in 2020, and now it's about $150 million.
That's a good jump as well. I mean, it's interesting to see these strategies by different companies as well. And I think, we see, for me, I mean, you see that, there's a lot of chaos out there. Politics is not easing off. There's war, and unless things calm down, there's a lot more peace. Having interesting locations probably is much less attractive. And it's tough if you're these companies because they've say over the last decade they've picked up projects that they like, but maybe those projects now they're like, darn, we wanted to develop that, but really, does it make sense right now?
Yes, yeah, I think people are very, they're less eager to get into those, call it less safe mining jurisdictions than arguably ever before, right?
Yes, and that bodes well. On many fronts, Canada is generally safe because at least even with the current government, there's an acknowledgement of needing critical metals. I wouldn't say they're terribly pro mining, but if we have a switch, it might change. But even with what we have today, there is the acknowledgement and there is some investment and there are things kind of happening, and that's a big step forward than a lot of other places.
Yeah, agreed. And of course, it also varies by province. BC being the elephant in the room, right?
Yes. So let's talk a little bit about because those are the big ones. Barrick, Newmont, and Agnico. My thought. Tell me what your thoughts are out of those three. And I don't mean like stock performance. It seems like Agnico, out of those three, is the more appealing, just because they managed to get those costs under control, and that speaks very highly of management, I would say.
Absolutely. They're now, it's almost surprising, right? They're now they're producing at almost the same levels as Barrick now, right? And and their costs are up 25% since 2020. Compare that to Barrick, where their costs are up 50 to 60%. And Agnico went from, in 2020 they produced 1.7 million ounces. In 2023, they produced 3.4 million, and now they're on track to even beat that now. And then look at Barrick; they were producing almost 5 million ounces in 2020. Now they're producing just shy of 1 million ounces a quarter. It's and their costs have creeped up.
It's gone up.
It's
and that is scary because yes, we've got record gold, and it's awesome. It's great. But and then we'll move off from this part.
Yeah,
the Newmont thing was a little disappointing because you just think there's an opportunity here you can harness into massive, and it's good cash flow. Don't get me wrong, but like really high cash flow.
Yeah,
and yes, we can blame inflation. I mean, there has been prices of things have gone up. They just have. But that's also another kind of interesting factor that we can kind of explore as well, is that
for sure
when they're looking at M&A and they're looking at other projects, a grassroots project, obviously, just from start is going to cost a ton. Something that maybe has been kind of put to sleep for a while, maybe could produce a little bit sooner, might be great. And certainly somewhere where there's infrastructure, there's already stuff built up, that's going to be a bit more exciting. I guess as we're pivoting towards that kind of overall conversation, someone we haven't talked as much about, and not solely those three, but like a Kinross. So Kinross has done very well, and they look like they've got a lot of potential moving forward as well.
Yeah, Kinross, I think, is taking a longer term view than some of the other producers out there. And they have, in my view, one of the most exciting project pipelines of the majors. You've got the Great Bear project. The PEA for that came out in September. And, this company, which produces just over 500,000 ounces a quarter, that Great Bear project is going to produce, over the first 8 years, another 500,000 ounces a year.
Oof.
And it's going to lower their AISC significantly, because for those first 8 years, they're looking at an AISC of about $800 an ounce, all in sustaining cost. It's a beautiful project in the heart of Red Lake.
Yes. Now we were lucky with that. We know everyone knows Great Bear. I mean, it was such a great story. It's one of those charts too that just seems it's like it just looked great. And what a find. That, I think people forget that's kind of sitting there, not on the sidelines, but it's in production soon. That's a very significant asset to be coming on. Whereas if you compare it to some others, there's a lot of controversy over Detour Mine, a little bit over the Madsen project as well, which we'll get into a little bit. There, same region.
I worked at both those mines.
So this is what's great. This is why we've got to. Both those very well, and so we want to pick your brain and tell us a little bit about, because we're kind of narrowing down to this region now, and you have worked them, and you once again an analyst, a CFA, you've got both sides of the coin of understanding the engineering, the geology, mining in general, but also the cost, and as a stock, what would be attractive, and that's a rare find in this space. It's a very valuable find, but walk us through. Let's start with we'll pivot from Great Bear, because that was so great and so wonderful. It's there, it's coming online. Kinross looks great. What's something else around there? Let's talk Detour. Let's talk Detour first.
Sure. Look, I mean, Detour is my first job as a mining engineer. Actually, mining engineering student at the time. But it was a good experience, because I was there when they formally went into commercial production. Now, they had some struggles, but they ended up coming through. And, now that's a cornerstone asset for Agnico, right? And still amazing exploration potential there. So now I think it's if I'm not mistaken, it's the second biggest producer in Canada.
Very nice. All right, let's jump into Madsen then. So this is pure gold, Madsen. We'll pivot a little bit here, and we'll say this with a little promotion too. We're going to have Gwen Preston on Friday, I think. So from West Red Lake Gold, which now has the Madsen project. But once again, the Madsen project, what it looked like. So tell us when you arrived there, what was it like? What happened? Tell us a little story.
Okay, so they hired me on. What was it, 2017, I believe, around there, and they hired me on to lead their test mining program. So they needed an engineer who knew how to survey and can design prints, and they just wanted to hire one. I knew how to do a bit of everything, so they hired me on for that, and test mining program went great. The grade reconciled well, but it took us a long time. That was a 7,000 ton bulk sample. We weren't really doing much we weren't doing any stoping, really. We were just following the vein, and it took us a while. And then we went, when we wrapped that up, or as we were wrapping up that test mining program, that's when we were working on the feasibility study at the same time. So we went straight from PEA to feasibility study. And I think what happened there was, management got a little too aggressive in terms of how many ounces they think that they could have gotten out of that. And, to me, that was kind of the writing was on the wall, right? You have it took us all summer plus into the fall to get 7,000 tons and not dilute the crap out of your ore body. And now you want to aim for an 800 ton per day mine. It's one of those things where sure you could do it, but you're gonna have to face dilution in the face. And on top of that, they really did not have as good of an understanding as West Red Lake does now today. SRK went in there, remodeled the whole ore body kind of as Pure Gold was going under. So part of the reason it took us such a long time, admittedly, is because the geology was hard to follow. We were mining the McVeigh area. It's absolutely true. Geology there is more complex. We didn't have a handle on it.
Yeah.
It took us a long time because maybe we just didn't have a handle on it. And SRK put a new wireframe on, and I do think West Red Lake has a better chance of making it work than Pure Gold did, but it is a very, of course, a speculative play, like anything in this game.
That's kind of what we wanted to get at. Was it's a very in the space a controversial topic because people really thought that it was going to go, and then it fell apart quite dramatically, and it's a bummer for a lot of investors. It kind of took them by surprise, but at the same time, sometimes from people's errors and mistakes, there's a lot of data, and like you're saying, there's a lot there. Someone can put a new framework together, put a new blueprint, and put new eyes on it. Go, okay, what do we have here? Do we have a shot? And that's, if I even look in forums, that seems to be, people are like, well, how are you guys going to be any different than here and then here? And it's
another big benefit that West Red Lake has, aside from a more, Pure Gold had a pretty, in retrospect, it's easy to say it, they had a pretty poorly designed financing package, right? Where it didn't, if they had any hiccups whatsoever, they were kind of screwed. So it is nice to have, a guy like Frank Juster behind you who's maybe able to help manage those hiccups. And the other thing is West Red Lake has ounces in the ground elsewhere in Red Lake. So if they want to, I don't know what their long-term ambitions are, but if they want to maintain that, 800 tons a day, it doesn't all need to come from the Matson mine. It can come from their other regional mines potentially. Or maybe it even comes from us. We've got this project that's 10 kilometers away that's basically untouched, and who knows what's lying there.
Well, that's what's interesting too, because that's, I guess, the interesting pivot. Also, why we wanted you on, because you have this project that's right smack bump right there. And once again, it's relevant because you have been an analyst for a long time. You've worked in all these areas in that region. So if there's someone who can comment on those companies that reach it, what's happening, it would be you. Tell us about how you even got the project. And obviously we know what drew it to you. You know it very well. But how did you get it, for one?
That's a fun story.
Okay.
So when was it, in 2017 or 2018? There was a girl working at Madsen named Bridget Galinas, and then she went over to work at Great Bear shortly after, and she was writing her master's research on this project 10 kilometers away, 10 kilometers west. And now I don't know how familiar your audience is with the geology side of things, but Red Lake, it's a prolific district. 30 million ounces have been produced there. 94% of those ounces occur within 300 meters of this famous contact between two major rock groups. I don't know if you're able to pull it up in the deck right now or not, but if you go to the slide that's titled Laird Lake, you'll see it.
Okay.
And
there we go.
Yeah, there we go. So that contact is that thick white line. You can see Madsen, Sterret-Alston. That's about, call it a 5 million ounce endowment, or 4.5. There's 2.5 million ounces past production at around 9 grams a ton, and there's another 2 to 2.5 sitting there. And then she was writing her master's research on this project. Now, historically, you want it to be in the Balmer Rocks. You want to be 300 meters from this contact in the Balmer Rocks. Historically, our Laird Lake project was mapped as Confederation Rocks. So no, it was largely ignored. And her research was really mapping out that contact on our ground. And that's what you could see on the Laird Lake project there, that thick white line. That's the contact that she mapped out as part of her master's research. And so this is a mature camp, but it had this target that's been totally unexplored. She aged into the rocks, said, hold on, there's Balmer Rocks here. Not only that, these are actually the same rocks as Madsen. It's just offset by this Laird Lake fault. And that's that dotted line that you see here. So you can kind of imagine the rocks move like this, but if you were to move it back, you don't have to be a geologist to see it. You know, this is magnetics, but the purple goes with purple. You see where that contact follows. We've got visible gold showings throughout. We plan on press releasing our initial grab sample assays in the coming weeks. But this is a really exciting project because it's got all the right ingredients to host, another Red Lake style deposit.
And that's also why we wanted you on too, because like people always ask, well, is the gold run done? Which we'll start off with that macro, but also we wanted people to have opportunity to see some of these companies have gone up 80%, 70%. You're doing great, doing really well. But also people are thinking, well, if I really want to get like an asymmetric gain, if I really want to get a handle on something, what's something new? What's something that's clean, that's fresh, that hasn't already raised money into it, that's not diluted, that's not anything, that's even anywhere around here. So you happen to have something.
Good. You laid it on the slide, but this is kind of showcasing that point. Basically, anywhere where that contact has been mapped historically has seen a lot of drilling. Here, it hasn't seen a lot of drilling, and that's just a function of this project hasn't been really recycled through the markets before. We're looking at not really a new area of Red Lake, but a previously unloved area of Red Lake.
So what made it unloved? Like, what was it like? It
you could see all the dots here are historic drill holes, and you could see Laird Lake has barely been touched, right? And what made it unloved is just that it's a very new interpretation that there's Balmer Rocks here and that you've got that contact there. That's a brand new, the thesis came out in 2018. That's when it was published. But the white paper associated with it, which actually had more eyeballs on it, that only came out this year, right? Only a few months ago.
Okay.
So no one really knew about this whole new understanding of Red Lake.
See, we like that too, because we always say to people, like, listen, if a company has a thesis that they're working off of, then that's a key indicator. And this comes with a thesis, a PhD thesis, kind of packed in. Tell us a little bit too. I mean, a lot of people do know this area and whatnot, but tell us like the types of systems that you have without getting too heavy in the geo. Like these could go 2 kilometers down, that kind of stuff, so people get a sense of what it's going to look like, mapping, drilling, everything.
Sure. So near surface, what Red Lake is known for is grade, right? This is the district that started Goldcorp and made Rob McEwen very famous, right? At their peak, after they discovered the high grade zone, which, as you said, 2 kilometers deep, after they discovered that's they were producing 500,000 ounces a year at an average grade of 77 grams a ton.
Oh, yeah.
Nowhere else do you really see that in the world, right? Like that's to have that scale of high grade mineralization. It's the reserve grade in the high grade zone was over 90 grams a ton, and even Madsen's got their own high grade zone. Don't quote me here. I think it's over 20 grams a ton there. So these things are complicated. They're patchy, but they usually start with a mine that's where they were looking at, call it 8-9 gram material, mining that, and then as they get deeper, they encounter the real juice.
Yes.
But that doesn't mean you can't find the goodies closer to surface either. I mean, look at Great Bear. That mine is an open pit. At least at the beginning, it's an open pit mine, and their average grade is 3 grams a ton, which is incredibly high grade for an orogenic open pit gold mine.
Yes. This is what makes this area attractive too, because even with like all-in sustaining costs, when you're coming to an area that has tons of infrastructure already built, you still have to, obviously you have to build a mine. That's not cheap, but that comes prepackaged with a ton already done. That's a different story than what you need to hit, say, I'll just pick on Mongolia, out in the middle of nowhere in Mongolia.
I mean, plus the workforce too, right? Like these are the whole community is very familiar with mining. It employs most of them, and it's hard to find good miners, truly.
Well, that's interesting too. Is that you bring up, and someone asked me the other day, said, Andrew, even as regards to the whole, say, electrification as well as precious metals, if someone said we got to squeeze in a ton of money into this space, A, how do we do it? And two, even if we waved a magic wand and said, we're going to put 10 billion into the juniors, we're going to fund all the exploration possible. Would you, and we'll even bring to production what we can. Would you even have the workforce to be able to do that?
Yeah, there would need to be a lot of training, and a lot of collaboration with communities and whatnot to get the skilled workforce that we need. That's for sure.
To get up and going. But in your case, though, what's attractive is that my guess is that this year, more than a lot of other years, these guys with lots of free cash flow, they're going to show up at PDAC and VRIC as well. And they're going to be looking for projects like this where they're like, they'd want to see some numbers. It's like, if you can hit some numbers, you're right in where they want to see it. Like it's, building a mine near a mine is a lot easier than, once again, out in the middle of somewhere else and out in the middle of nowhere. There's a very straightforward process as to how it gets done. These things make a big difference whenever you're exploring for something.
Absolutely. Yeah.
Give me like your cheat sheet. Like what, like when you're looking, I know obviously you're going to be a little biased because you've got a project, but but it's take your project away and just like when you were looking at, listen, I want a project. This is what I need to see.
Sure. So location. It needs to be in a safe area. It's always a plus if you have big companies spending a lot of dollars near you. And I'm not saying that because closeology is the way to go. I think in our previous interview, I said, be careful of closeology stories because you could be close, but in the wrong rocks.
Sure.
Obviously, the geology is more important than the location, right? You have to actually have the deposit there. But yeah, to backpedal, if you're going for a grassroots project, what scale are you going for? And in my view, you always want to chase scale. You want something that's big. You want something that is, call it 2 million ounces, I think is kind of that threshold that you need for someone to get excited about. But it also depends where you are. So in our case, we've got 10 kilometers of this contact in Red Lake. And we've got 4 to 5 million ounces hosted on the other half of that contact. And we have this untested part of that contact that's 10 kilometers long. So obviously we're chasing a multi-million ounce gold deposit. But if we miss and we only find, call it 250,000 ounces or 500,000 ounces, if you're near a company like Kinross or a company like Evolution or a company like West Red Lake, you don't necessarily need that scale in order to be an attractive takeout target for them, right?
Yes.
You could be a very compelling satellite target just for them, right?
That's
so it's nice to be able to fall back on that.
Yeah, it's kind of like having a bit of an optionality play, where is that's why I look at it, is that if you're in the larger camp zone, it means you can shoot for the huge numbers, but you also are not required to. Once again, if you're up and in the middle of even Golden Triangle or Yukon, which we like, and there's great projects, you got to hit it out of the park because the costs go up. Never mind just the helicopters. I always pick on the helicopters, but you're flying around in helicopters for exploration. That takes a lot of money.
Yeah, absolutely. And like we have a very similar story in, majors are throwing a lot of money into the Walker Lane of Nevada.
Yes.
Anglo, this is going underneath everyone's radar here, but Anglo has 16.6 million ounces in the Walker Lane in Nevada. A lot of people don't realize it because they're a major company. They're not producing from it yet.
Yes.
That's going into production next year. That's their Silicon, Merlin, and North Bullfrog projects. Just immediately north of Vegas.
Wow. Okay.
And we're in that neck of the woods too at Excelsior. And in our case, the
Yes.
discovery's already been made. This isn't a grassroots play. This is a district where we already have those stunning drill intercepts on our project. And in fact, our discovery holes are very similar to Silicon's discovery holes in terms of grade thickness. So it's exciting.
All right. Well, let's explore this a bit more, because that's an interesting conversation for people if they're looking at a producer and they say, okay, where should I be looking at? And often it's like, well, where are you getting more ounces from? And this Anglo Gold Ashanti, that's really very interesting to know that these are coming on, and it's that kind of endowment. That's impressive.
Just to reiterate my point there that I made before in terms of exploration spend and where majors are focusing their dollars. So Anglo is a company with zero North American production. They're spending 40% of their global exploration budget on Nevada. So for context, they're spending about 3 times as much on drilling in Nevada than Newmont is, right?
Holy. So that if that pans out, well, it doesn't have to pan out. I mean, they've got it in the ground. Like, that's going to leapfrog them. I can't tell the future, but certainly that looks very appealing if you're looking at a producer that has an upside potential. Otherwise, you've got someone who's looking through projects, and once again, they're going, oh my God, we have the right portfolio for right now, and they have to pivot or maybe buy. That looks very attractive for Anglo.
Yeah, absolutely. And there's other majors have taken note too, right? Kinross is doing all kinds of regional exploration. They've got the Round Mountain mine in the Walker Lane district as well.
Yeah.
And generally, these companies are looking for porphyry epithermal type deposits. This camp is known for from the late 1800s, these narrow vein, wicked high grade gold and silver mines. And with a modern lens, and if you have the right host rock, where mineralization isn't confined to these narrow veins, if it could bleed out and it's oxides, you could be looking at a very, very profitable open pittable target, which is what we think we have at Excelsior, right? This is historic mines, 40 grams a ton was their average mining grade at the Buster mine, which is on our Excelsior project. Again, mineralization bleeds out into the host rock. And then about a year and a half ago, Athena drilled about 400 meters away from that historic resource, the best intercepts ever drilled on that project. So it's a relatively new discovery. This is 5.4 grams over 33.5 meters.
Oh yeah.
4 grams over 52 meters. Like, these are world-class intercepts.
Yes.
Held in this 10, 11 million market cap company, right?
Yes. Well, that's the thing. Okay, as an analyst, we'll put your analyst hat back on, and I know, like, once again, you're biased. You've got a project, and it sounds interesting, and we're gonna get into
I forgot I wasn't supposed to talk my own book there.
Sorry. No. That's what we want you to. Like, we're gonna get more into it. But when we there's a ton of companies that are in the Walker Lane, right? So they're all like, hey, we're close. We've got this. We've got that. When you're looking at that region as just the analyst, and that'll bleed into how you got this project. What are you looking for? Because once again, it's the closeology. Someone says, hey, we're close to this area. It's prolific. It's great. And baked into this question is, does porphyry also mean like money? Like, you're going to have a lot of budget for finding. So I've baked in a couple things there, and we'll let you run.
Yeah, that's a great question. And I am of the view that, it depends, right? Like, if you're looking at a near surface target, if there's already porphyry mineralization identified, versus if you're blowing your brains out on a deep-seated buried porphyry deposit, then and your market cap's $4 million, you'll blow out your whole cap table on a single drill program, right? So we're looking, to be clear, we're looking at the targets that have been drilled already. They're not porphyries. These are porphyry and epithermal related. They're related, right?
Yes.
We're looking at a low sulfidation epithermal system. Same type of system that Anglo has at Silicon, right?
Okay.
If you pull up that slide, you could see this comparison between Silicon and Excelsior.
Okay. 1 second.
So
here,
in terms of when you say money, like in terms of printing money, if it's a mine, absolutely.
Well, yeah. Well,
it'll print. Discovering it, good luck.
It'll print money, yes. But yeah. Someone told me once, Andrew, if someone says porphyry, yes, it's exciting, because if you hit it, It's going to print money, but at the same time is that means you have the potential of spending a ton in defining it and chasing after it. It can mean you should have big money behind you. I don't know. You tell me what your thoughts are on that.
I would agree. Like if you're gonna, I wouldn't want to be a 4 million market cap chasing a very deep seated system, whether that's a porphyry or an IRG or whether that's even just a buried Carlin type deposit. Like it's one of those things where even you're most likely to not hit, right? That's just the reality of the game.
Yes.
And it's hard to excite investors over a technical success as well.
Yes.
And again, you can blow out your whole cap table on a single drill program. So again, this is a target that's more manageable for a junior of our size. And it's also a target that I think the majors are again, they're moving into this area. Our closest neighbor is Kinross. And they're doing all kinds of regional exploration across the Walker Lane. Centerra's in the district too now. They got almost 90% of their budget now going to Nevada, a jurisdiction where they don't produce anything. 90% of their money goes into Canada and the US, but still, they're out. They went from spending $1 million in 2020 in the US to $33 million in the US.
That's significant. Yes, so, and they've got a deal. Centerra is in Headwater.
They've got the Goldfield project. So
Goldfield project.
Yes. Yeah.
This is cool. Okay. So how did you get Excelsior? Okay, so there you go. So that's my first one. And I want to follow up too, because I'll forget. And maybe this has to do something about the employment standards at a Barrick or Newmont, or who they're attracting. Are they attracting younger, different view of people into the likes of Anglo Gold Ashanti? Like, are people like yourself going, you know what? I think I'd rather work over there. I think their projects are more interesting, or the management, or there's something than all these giant behemoth companies. Not that I want to cause problems for anybody, but it seems like these other ones seem to be positioning with a pipeline that looks quite attractive, whereas the larger, huger ones are somewhat struggling to some degree.
Yeah, you know what? When you're a big company with a long history, it's often hard to pivot. You can change the management team. It's hard to be scrappy, right? I think companies like Agnico and Kinross have shown, like, hey, we can deviate from the norm. Agnico investing in critical metals, for example, Kinross getting into very, very early stage grassroots stories, like what they're doing in New Brunswick now with Puma, and even Anglo. Like that was a discovery that they made. That was a kind of a missed opportunity by the previous operators. They did this deal. They got a sick royalty out of it. So, good for them. But that was I think, I don't know if it's a company thing or if it's a project thing. Like if you look up, and admittedly I'm guilty of this, I look at Anglo employees on LinkedIn and look at how many are working out of their Denver office, to just give you an idea of how that has changed over the years. They are ramping up and doing something big in Nevada. You can see it just because they're hiring a lot of people. I don't think I can comment on the age thing. For me, I started from a big mine, big company, and I realized I like the higher risk, higher reward part of the space. So I got into earlier and earlier stage things. So it's meanwhile, you've got other people that think differently. So
no, and that's interesting because we're called the market mindset, and I sometimes forget to ask people with the type of mindset that someone has to have, because this is it's one thing to even be interested in mining, which is a bit of a sale that we have to do a better job encouraging younger people to get into. But there's a certain mindset for someone who's attracted to the treasure hunting or seeking, finding things. But what is it that you found attractive? What was it about mining that initially got you there, and then that comment you just made of going, okay, I work at a major. There's probably safety here, but I'm more interested in this.
Well, a lot of people don't know mining is an option for them, right? I didn't know it was an option for me until university when it came time to pick what I want to specialize in. So I was good at math and science, so I was studying engineering. And then it came time to pick which field of engineering you want to go into. And I was like, what is mining? It was the fact that I didn't know anything about it that attracted me to it. But also just the scale of it. You're not building, with my engineering hat on, you're not building, some small electrical component for something. You're building something that can support generations of people. So that's what attracted me to the space. And as I got more into it, I learned how much I liked geology. After I was already in the field, I found it fascinating how you can use science to, as you said, go treasure hunting.
You usually hear this, maybe it's an older saying of like geology is an art as well as a science. Do you think that's kind of BS now? It's more like, no, it's more science with, some creativity. You have to put on a different hat. Like, what's your thought on that kind of general term that people throw around?
I very much agree with that term, that it is an art and a science in one. I think you use science. You have to come up with a scientific explanation as to how and why something might be there or not be there. And people come up with all kinds of different theories. I'm sure you've heard that term before, where you get two geologists in a room and you get like 15 different opinions.
Yeah. And I mean, some seem to do better than others. That's for sure. Now, do you think that's being, once again, putting on the analyst hat, is that a function of if you get a couple wins early, you're going to have more money to invest? Basically, you're going to have more people interested. You get more shots at it, or do you think some people just get a better feel?
I think it's both. I think there is such thing as having a good geologist and having a bad geologist. I think you do want a creative geologist, and you want someone that you want people that are passionate about what they do and people that are entrepreneurial, and that's who I've tried to surround myself with. People that are smarter than me, and I believe that's what we have with our team at Libra and Athena. Both the geologists that work with me are guys that, when we were living in these small little mining towns, they were off in the bush on weekends, staking ground with, Ben had his little portable backpack drill rig.
Yeah.
And these guys are up at, midnight, sifting through historical reports. The team is at the end there. That's David Goodman there, of Dundee fame.
Yes. I was going to segue into that too. Like we were talking about, sorry to interrupt, but we were talking about like a Frank Justra can support Madsen. Like you're saying, listen, if you've got that support, there's going to be money following. You have your own version of that in this fellow, David Goodman. If people don't know, I'll let you say who he is, but this gives people a bit of a sense as to what you're also bringing to the table, not only these two projects.
Sure. Like David is in full transparency, David's actually my father-in-law. So, I talked about why I went into mining, right? So that was all me. But the reason I went into mining finance was actually because of I guess the Goodmans. Ned was the first one that said, Koby, you should go into investing. And there's not a lot of technical people that that are pursuing the CFA at the same time. Like there's not a lot of you. And I was like, okay, well, you guys have been successful, so I'll follow your advice here. And David was the one that he wrote our first check into Libra and said, I want to get involved. Let's go. Let's do it. And if you go to the next slide, this is the team that he's backing there. So
yes.
I will say this for a relatively young team, we're all young 30s or late 20s. We do have a good mix of small company, big company experience.
Yep.
We do have a mix of exploration and production experience. And I think what's really important for every geologist as well is to know what an economic deposit looks like. Because if you're getting a hint that, hey, this thing might not be economic, it's time to walk away.
Yeah.
And what we're really looking for, you're asking me like to put on my analyst hat before when
Yes.
looking at the Walker Lane. The truth is, when we're looking at Excelsior, I had my mining engineering hat on.
Yeah. Okay.
I thought, could this be potentially an economic mine? And honestly, I believe that it could be. Right. This is something that our guys, to go into Excelsior, like this company didn't really have a data room before.
Yeah.
So when we were doing our due diligence, I brought Andrew down to Nevada with me, and Andrew actually wrote his master's in porphyry epithermal systems, so it's very, very relevant to what we were doing. And he was salivating. He was saying, "Koby, whatever we could do to get the keys and drive, please." And the writing was on the wall. I mean, you see those intercepts, and you could kind of piece together. Okay, look, the historic resources here, most holes, so many, that 4 gram over 52 meter hole, that actually ended in mineralization. So that you have all these holes that were almost universally drilled way too shallow, but that historic resource of 200,000 ounces it was only defined over, call it a 100 meter strike to 61 meters deep, non-compliant. I don't want to get in trouble here. This is non-compliant, but we know mineralization extends to at least double that. And the best intercepts are 400 meters away, and geochemically, it looks the exact same as this historic resource area. So we think that they connect. And if you were to relook at this big picture, wrapping an open pit around these historic mines, actually, we believe it's got multi-million ounce potential here. So we're excited to be the ones to take this big picture look at this project that's kind of been in this hidden gem that's been wrapped up in this 10 million market cap company.
Yeah, like that's what's it has the metrics to move. I mean, that's what people want to see too. Is that like, because I'm always being asked, like, hey Andrew, what can we look at that has a good structure, that's newish, that has a lot to it. This has, and this is in part where we wanted to have you on, was to put on an analyst hat, let people know about the producers, let them know about some of the mid tier. Like, what's looking good out there, who's got a project pipeline, areas to look at, get a lot of, depth of knowledge from you for free, basically get you to put some work in, which we really appreciate. And for those that don't know, Koby put together a big chart of all sorts of data and whatnot for this conversation beforehand. And we love that, because we get a lot of free information, a lot of work that we appreciate. But also, we wanted to let people know that there is an opportunity here with Athena, that as well. So you're getting someone, and there's not a lot of them, once again, CFA, who's an investment banking analysis as well, analyst, mining engineer, has worked in these types of areas and places, and they've got a thesis that is strong with a significant backer. And those are never guarantees of anything, but those are certainly the critical mixes people want to see. And they probably haven't heard of you, and that's part of it too. I mean, I hadn't heard until we ran into you at Red Lake, or sorry, at the Red Cloud event. Yeah, Red Lake. No,
on the site tour, Andrew.
Yes.
We'll take you there.
Yeah. So tell us what's happening right now then with Athena, because I imagine your overall macro for gold is positive. Maybe it's not, but what do you think the next 6 months, a year, 2 years? What's your thoughts as macro, and then we'll kind of summarize what you got here.
Look, I'm just going to preface it by saying, if you want leverage to gold price, this is, maybe this is a controversial opinion here, and maybe as a CEO trying to raise money for my own deal, I shouldn't be saying this, but the truth is if you want leverage to gold, don't buy junior mining companies. Buy an ETF. Borrow money and then buy gold, right? To buy gold if you want leverage. Don't take on the technical risk.
Yep.
What we're looking at Athena is an opportunity to find a large scale mine. We've got 2 lottery tickets, one in Red Lake, one in Nevada. The one in Nevada, the discovery's already been made and people don't know about it. you can get it, and we're doing our financing at 5 cents. You can get in for dirt cheap at a discount to market. And the truth is that's what investors should be buying if they're looking to take on that technical risk, right? Then you buy the juniors. What you don't want to do is buy a junior just because gold is ripping.
Yeah.
And with anything, not investing advice. That's just my personal viewpoint, right?
Yes.
That being said, some people want to have this type of leverage, and I do understand that. Look, the GDXJ is actually now started to outperform the GDX. The GDXJ is up 47% year on year, and if you were to look at what happened in 2020, it looks like gold price, the GDX, the more senior companies, and the junior companies, they all moved about the same percentage wise. But now the juniors are actually starting to get that leverage. But just to highlight, I think I'll tie this into the macro, Andrew. But taking a step back here, gold is a hedge against three major things in my view. You've got a hedge against the US dollar. You've got a hedge against inflation. You've got a hedge against geopolitical risk. And I think 2020 was more about, the COVID scare. Yes, there was inflation brewing, but I think inflation is only hitting us now. Hence why, both the gold price is going up, but so is the cost. In 2020, you didn't have that cost creep like the same extent that you have now. So I think that's more what's moving gold now, in addition to the geopolitical tensions, of course, but I think inflation is very real. I am not bullish that governments will be able to fight their way through it, honestly. So I am personally bullish on gold. The fact that costs have gone up too means that these companies, the cost curve is now higher, right?
Yeah.
So if gold goes down back to, call it, it wasn't that long ago, it was in my lifetime that it was, or at least it was in my lifetime as a mining engineer, right? When gold was at sub $1,300 an ounce, Newmont's out of business, right? That's the reality. So it's times have changed a lot. I think pricing, in my view, again, not investing advice, will stay higher for longer. Longer than people realize. And even if geopolitical tensions ease, I think the other factors that are driving gold price are here to stay.
Yeah, like things like, what do you think of like the debt? I mean, it kind of gets overlooked to some degree, and people kind of go, $1 trillion that they have to pay out on interest payments on the U.S. debt.
Yeah,
that's manageable. You go, is it? Like, that's got to be a flavor that's affecting things too.
Yeah, I mean, that scares me about the U.S. dollar, right? And a lot of people don't realize this, but the gold is actually a better hedge against the U.S. dollar than it is inflation, right? Gold is more likely to outperform in times of a weak U.S. dollar than it is more likely to outperform in high inflationary environments. So it's just something to keep in mind, and I think that debt will affect both of those things.
I like too that you mentioned, because like we like to kind of frame someone's mindset when they're looking at the sector in general, at gold in any way, is that if you're new to this, and you have interest, maybe like the Van Eck or even a Sprott ETF, maybe that's a good way to ease in. But if we, there's opportunity there. It's asymmetric. If things go wild, they go wild. But you've got a basket to work with. And if you're really excited and you have interest and you want to get a bit more into it and position yourself for like a true asymmetric gain, it takes a bit of work. You got to, you listen to me, listen to you, whatever. That's where your project becomes much more exciting or enticing, because that's the leverage, obviously, at a 5 cent. Boom. Like, there's a lot to work on.
Well, also, like, just the way that we look at projects, it's not like we look at them with the idea that, okay, we're at 2,700 gold now, this thing is going to work. We want to have that safety net. So what I fear is going to happen, with more capital now trickling down towards these junior companies, is the promoters come out, and we're going to see companies that are suddenly increasing the resource by simply lowering that cutoff grade. And as I said, you can't just do that. You've got cost creeping up, so you can't just lower your cutoff grade just because gold prices are higher. And keep in mind too, when you got more work has to be done, put into that cutoff grade estimate, because as you mine lower grade material, your recoveries also go down as well. So for us, we continue, like in Nevada at Excelsior, where we're looking at a deposit within 100 meters of surface, open pittable, oxide gold, so heap leachable potentially. We are looking at things as if the cutoff is 0.2. We haven't changed it. That's what that's what Anglo uses at Silicon. Some companies even use 0.15, but our standard is 0.2. Gives us that safety net in case gold comes back down, because we want to be able to position ourselves as a low cost. We're looking for operations that have that high margin built into it. So we're looking for something that's low cost. And then the other way you do that is by looking at projects that are near infrastructure. To your point, the CapEx build, and the operating costs too. As opposed to flying people in and out, we want to be somewhere where we have infrastructure. So Nevada, we're in the Walker Lane trend. There's small mining towns all over the darn place, and in Red Lake, of course, which you've already touched on. Both projects with road access. It's low cost to explore.
Does that attract some of the majors as well? So when they are looking, they can smell the BS story of like, hey, we're changing our metrics a bit. They know what to look for, but the average person, even a pretty solid investor, wouldn't be aware of some of the kind of sleight of hand tricks to get done. But if you're doing this to a certain standard, would that also be your partners around, like the big producers? Is that kind of like that makes you a bit more attractive to them too? Like they take you a bit more serious?
I can't speak for them, to be honest, but I would think so, right?
Yeah.
We're not a group of promoters, to be honest with you. Like we came from the field, and we see an opportunity that we believe others have missed.
Okay, so for someone like you mentioned if someone's looking at you compared to someone else, how do they avoid some of the promoter stuff? Like, I don't want to get too much into the weeds into this, but like, what are just a couple things that will make a couple like actual hardcore promoters sad that you've kind of like leak out? No,
I think
people. This is some of the nitty gritty that people actually want to know, because they don't know. And especially like we're trying to attract new people and get them excited, but also tell them, listen, there's a lot of lifestyle out there. There's a lot of pump out there. There's a lot of, and it's not the easiest sector to jump right into. What's something that someone could listen, like that's right there is something to be wary of.
Okay. So first thing is the management team. And I'm not even, like what's their background? And I'm not saying you need to come from the field in order to be a mining CEO at all. I'm just saying, do you notice that they're usually in sectors that are hot or at one point hot? Did they pivot from a cannabis to a crypto company to a lithium company to now a gold or silver company? To me, that's kind of a red flag that there's a lack of long-term vision. And you're not attracting the right investor base with that. If you're a cannabis investor and now this company's pivoted over to metals, you're like, what the hell? And this company's not going to have a good shareholder base. And I think it's important to be transparent with your investors. Like it's important to note with Libra, the investor base that we built up were mostly lithium bulls. So we decided to keep Libra as a separate entity, as a separate lithium entity. Whereas Athena is a group of precious metal people. A lot of them don't like lithium. So naturally, you're not going to have a good shareholder base. Apologies to go off on a tangent. So another thing is, what's the selling point? Is the selling point because gold is high, it's time to invest in my deal? No, that goes back to what I said before. If you want leverage to gold, get leverage to gold without taking on all the technical risk associated with it. And then if you want to, if the number one selling point of your company as well is look who our neighbors are, look where they are, but there's no discussion on the geology at all, that's just promotional bullcrap. Closology, as I said before, is one of the worst indicators of prospectivity.
Like, it's nice to have, but it's a nuanced phrase for a reason. Like,
yeah.
Well, tell us. Okay,
it sells.
Yes.
Like, people are like, oh, they're next door to Great Bear or whatever. Like, it'll work.
Well, because
there's 15 different juniors that think that they have the extension to the LP fault, right? Admittedly, we're one of them, right? Like this, but that's not.
No, but that's important.
Not all of them could be right.
Yes, not everyone can be right, and it's the same you said. The Walker Lane is that okay? They're attractive for a reason, but at the same time, that can't just be the story. Like, if that's just the story, and there's no real meat on the bone, well, then there's not enough there.
Yeah, some other red flags to look out for would be, their cutoff grade. I see a lot of companies using narrow vein cutoffs of 2 grams. I've even seen like 1.6 grams for narrow vein mining. Okay. Show me a mine in Canada that's able to make that work. Like one that's operated by a company, a much more reputable company than this shitty little junior shitco that's using 1.6 grams as your underground cutoff on a narrow vein deposit. Like, good luck. That won't work. And but they use low cutoff grades, so that way they'll inflate the label. They're able. Wow, I can't talk. They're able to capture all that lower grade material now.
Yes.
And inflate their resource just to get a higher number. But it's not realistic. So be careful of low grade deposits, especially if they're underground, especially if the cutoff grade is really low. One rule of thumb that I learned from my cousin, actually, who learned it from Julian Barnes, was that your average grade as well should be at least double of your cutoff grade.
Okay, that's good to know. Okay, yeah.
And if it's 6 times as high, then also be careful. You want it to be at least double to 6 times, because if it's 6 times as high, then that's a unicorn and it's probably a scam.
Yeah, there's something. Yeah. Someone's been salting it a bit.
Yeah, exactly.
All right. Well, this is brilliant, Koby. Let's have you sum it all up, because you've given us a lot away here. Just kind of walk us through briefly, kind of summarize both projects again, and then you have an offering right now. So you are raising money. So that's the thing. People can reach out to you. They can reach out to me here, Andrew, at the Market Mindset. I'll direct you back to Koby as well if they're looking for a project that they want. And before I forget, is there a warrant attached?
Yep. Yeah, that's right. So we're doing our financing at 5 cents.
Okay.
Stock has been holding steady above that. Stock it's very tightly held. There's only about 30% in the public float. Management owns the bulk of it, as well as Libra. What's important is that none of the previous management team is going anywhere. There's no cheap paper waiting to come off. It's very clean.
Yeah.
The stock's still been holding steady above 6 cents for the last couple of weeks, and we're doing the financing at 5 cents. Comes with a half warrant at 12 cents. Now's the time to get in. This is the round to position the right people.
And this raise will give you do you have targets? Are you going to define some more targets first, or what's the speed at which you can kind of get going?
So this is the hard dollar raise, and it's going to Nevada. The goal there. So we have boots on mobilizing in 2 days from now. So we closed the first tranche of our $1 million PP. We closed $600,000. None of that went to promo. There was no finder's fees in it. There was no marketing bullshit. That was just cold hard cash. So that's going to we're starting off property wide, big picture, map out the whole thing. Are we going to get results with that program that people are going to get excited about? Probably not, but we have to do our homework. We have to understand the structure. They've never done oriented core here, ever. To understand the structure of a structurally hosted system, you need to do oriented core. We want to connect those 2 zones, the Buster zone and the Western Slope zone. That's how we think we can grow this out into being a large-scale deposit. So for the first time ever, we're going to bring in oriented core. And we're going to figure out that structure. And after we drill there, hopefully we'll have some bangers to show to the market. But what's more important, I think, is that we'll know where to step out for the next hole. And what I think the market wants to see is repeatable intercepts. And that's what I think that we can achieve here at Excelsior Springs.
Excellent. Well, like I said before, we're going to have Gwen on Friday. So we'll talk about, we'll mention you. We'll see if we can get Frank in the deal. But oddly enough, we've got Morgan Luckstrom on as well, who's also working with Frank Justra. He's on tomorrow, I think. So who knows? We've got 2 people coming on this week. Maybe they'll be able to usher in Frank into your deal as well. But listen, Koby, this was great. We really appreciate it. Getting the expertise and the knowledge, it's huge. It's great. We really appreciate it. We're once again, anyone reach out to me, I can directly straight to Koby. Any questions and all that. We don't want the Warren Clippers though. We want real investors.
That's right.
Go straight to Koby. And once again, we thank you for spending the time with us and helping to educate people, especially those that are new, that are getting into this and getting excited about it. This is a very compelling project you put forward, and we look forward to chatting with you soon as well. Although Libra is private, so just letting people know it's a private corp.
You can look, but you can't touch.
Yeah, that's a great way of putting it. Yeah, we want to have you back on soon as well, just to talk about lithium, because
Sure.
it's lithium's kind of gone out of favor, except for a little jump there with Rio and Arcadium. But we'll schedule that to talk just about lithium soon as well. But we really appreciate you talking about all this precious metals and the gold and what people can do and what some opportunities are. We really appreciate it.
Of course, Andrew, pleasure being here always. Thank you.
Take it easy, and see you later, everyone. Have a good day.
Cheers.